Hey, in this video I want to talk to you about updating your budget. And so every month, what should you actually track as a music teacher or a studio owner? What should you be paying attention to, measuring, etc.? I'm going to walk you through my little checklist that I have used for many years, and this is going to show you all the things that I would measure at the end of every month, on the first of the month, looking back, and use that information to tweak going forward any necessary changes. And I'll give you access to the PDF for free as well, but we're going to walk through all of those things that you should be measuring. So get a pen and paper and we'll get into it in just a sec. Alright, we're going to go pretty quick, so get your pen and paper if you've got it ready and get ready to write fast. The first thing that you want to measure is your student numbers. So things that you want to be checking there every month is, hey, how many new students did I get? How many students cancelled? And what is my ongoing retention rate? So how many students am I retaining month to month? And also, what's my year-to-date average of students that I have retained? And also, what is your monthly churn rate? Churn rate is kind of like flipping retention on its head, and it's saying how many are leaving every month. So it might be 2%, 5%, and you want to be able to track that so you can see is it going up or down. And when you implement new retention strategies as part of your strategy to improve your retention rate, is that churn rate going down? How fast is it going down based on the things that you're implementing? So that will be one of the first things that you want to have a bunch of stats on, is around your student numbers and all the things that come with it. Next is you want to be tracking all your overhead costs, and here's how I group them. And so what I do is a little bit different. I want to separate all my staff out, and I want to separate those that are employees, those that are contractors, and I want to measure them all separately. I want to know what I'm paying them, what I plan to pay them, and what that all adds to. I also want to track my marketing. Now, marketing would usually be, just tracked under your overhead expenses, but I want to actually pull those out, track them separately, because from there, using all the information around, like student numbers, new, converted, people leaving, etc., I can figure out heaps of really cool information that helps me grow my studio and know what things cost. So that's why I pull my marketing expenses out separately. Next would be your overhead expenses. That's kind of everything else that it costs you to run day to day, from your power to your phone to your musical equipment to any subscriptions, etc., etc. So that kind of covers all the main business expenses. And then there's another group which I call kind of like the other expenses, and I pull them out separately as well because I want to track them. And that covers things like this, like any debt payments. If you've got debt because you're using it to scale your business, buy more equipment, grow, whatever, those debt payments, tracking those, how's that going? Tax payments, I want to know, hey, how much is my tax going to be this month? How much did I pay last month? When is my next payment? Is enough of that set aside in my bank account, in my tax account, so that when tax day comes, it's just there. It's not something I have to pull out of my main checking account and stress over. Next is assets. Now, if you spend over a certain amount on a piece of equipment or an instrument, well, you actually have to pay tax on that amount. You can't fully write it off. So every country will have a different limit. Might be $500, might be $1,000, might be $5,000. And if you buy something worth more than that, you have to depreciate it as an asset. And so this is one way you can get stung by not knowing that and spending a whole lot of money on assets, and then you think, well, I've earned this much, I've spent the same amount, surely there's no tax to pay. But because you bought a whole bunch of assets and you have to depreciate that over time, we won't go into all the details about this now, you get stuck with a tax bill, and people are like, how the heck am I needing to pay tax? I spent all the money on legitimate business expenses. So assets is something you want to pull out and be setting aside and knowing, hey, this is how much I've spent, and therefore this is how much tax I need to set aside, blah, blah, blah. Next is drawings. So if you own a business, you might be paying yourself a salary, you might not be, you might be just taking money from the account as you need it. Well, those are called drawings. And so if you put money into the business, well, the business owes you money. If you take money out, then you owe the business, or you're going to have to pay tax on that money because you've kind of taken it like profit in advance. And so you want to just be keeping an eye on what money you're taking. It's okay to take some money if you're like, I need a holiday this weekend, I just need $300 really quickly, or I got a dentist bill and that was $1,000, it wasn't expected, it's not in my personal account, I just need to take $1,000 from the business, pay for that. That's cool. It's one of the perks of having a business, but you need to track it. And so that is something that I'm always tracking, money in and out, and making sure I've got the right amounts set aside for taxes on those amounts too. Let's get into a few more details. Revenue versus expenses. Just a simple calculation of all the revenue that's come in. Obviously, we want to be tracking that. We want to know what that's come from. So we want to know how much has come in from individual lessons, group lessons, maybe selling merchandise, books, events, online lessons, however you want to split things up. You want to know how that's split up, what percentage is from each. And then with all those expenses I have listed before, you want to know, at the end of the day, revenue minus all those expenses, are you actually spending more than you make? How big's the gap between what you bring in and what you actually spend? You want that gap to be as big as possible, with revenue being the top number. If they flip, oh man, you're in trouble. So revenue, just a basic check of that. And you want to, of course, make sure that when you're looking at this, you've got things set up so that you're not looking at the wrong numbers. And by wrong numbers, I don't mean you might be using an accounting software and you might think, well, how can I have the wrong numbers? It's all synced to my bank. But if you've clicked the wrong settings, or you're not looking at an actual cash summary of those expenses, depending where you are, the amounts you're looking at might actually be exclusive of tax. So you could actually have an unrealistic number just from clicking the wrong button. So that's a mistake I made in the first couple of years, not knowing. I needed to see the cash basis so that the amounts all included the sales tax, so I could budget properly. So make sure that's not a simple mistake you're making. Next couple of things. Net profit projection. So I set my budget up so I know at all times what my net profit projection is going to be. So at the end of the year, is it going to be 12%, 20%, 2%? And I can see what it currently is, and I can see what it's going to be if I follow my budget for the rest of the year. And it tells me the percentage and the dollar amount as well. So the exact amount of dollars that it's going to be. And I set a goal, and it tells me if the goal is how far away I am from the goal. So if the goal is 20% profit, it might tell me, hey, you actually need to increase your revenue or cut your expenses by $32,000 in the next 5 months. And so it'll give me the exact amount to work through if I have towards that actual goal of whatever percentage I've set. So you want to kind of track your net profit projection, and that's important because you own a business. And so if you generate all this money from teaching the incredible lessons that you do, and you pay yourself or you pay people and you pay all the expenses, at the end of the day, after you've paid yourself, you own a business, so there should be some money left for you for owning the business. And this is that number that tells you this is what that's going to be, that number. So you can see, hey, what's my little Christmas bonus going to look like, or what am I going to be paying company tax on at the end of the tax year. So you can see it coming. You don't have to wait till the end of the year and wait like a schoolboy waiting for his exam marks, hearing from the accountant, you owe this much and you made this much. You can kind of see it coming, which is really cool. 2 more to go. Let me have a sip of water. This one, monthly cost to acquire a customer. So every month I want to know how much did it cost me to get all those new students that we got. So we talked about student numbers and calculating new students. So I want to know, did it cost me $20 from all my marketing to get each new student, or did it cost me $200? And so I have that graphed out, and I want to see, based on all the little campaigns we're doing. I want to know, is that number going up or down, and where's it trending, and the little improvements that you're making in your marketing and the strategies you're using. Is this number hopefully getting lower, and if not lower, at least getting consistent, so it's not just big jagged spikes. 1 month it cost you $50 to get a student, 1 month it was $4. You kind of want to know what it roughly is, and you want to keep it pretty consistent if you can, because then you know that you can really invest in that and you can pay that much to really get a customer. So that's the monthly cost. Last number I'll give you is I'll give you one more before this one. I didn't write this down, so let me actually write it down for you, and it is this one. Lifetime value, LTV. So this is what we track to know what a customer is actually worth. So if you have a student and they've been learning with you for 1 year, you have another student that's been learning for 3 months, another that's been learning for 5 years, what is the average of all your customers calculated, so you know what they're worth? Because if you know, hey, it cost me $100 to get a student, that's pretty high, you wouldn't want that, but for some people it might be that high. Let's say it costs you $100 to get a student, but let's say the lifetime value is $1,000. Well, that's great, because that means that you 10x your money. But of course, from that you've got to take off all your expenses, and I'll do another video on that properly. So don't get excited. Don't listen to anyone that tells you if you get 10 times the response, you should just go pour all the money on it, because it's not how it works at all. You get that $1,000 over a long period of time. There's expenses off that, so you need a proper system to graph that all. But lifetime value, you want to see, and this comes back to your retention rate that was in here, of course. I lost all the paper. Which one? You get the idea. Retention rate, we want to know if your retention rate is improving, well, then your lifetime value is going up. Also, if you are getting students to spend more money on other things, whether it be buying workbooks from you, or taking extra classes, or going from 30-minute lessons to 60 minutes, or all those hundreds of things that we can do and tweak to make our business more profitable, we want to see the lifetime value going up. And so that's something I'm looking at every month, and it's just all these numbers are all automatic and from a template that I've built that just does it all for you. So it just takes 10 minutes to update your numbers every month, and I'll give you access to that at the end of this video. But lifetime value is one that you want to keep an eye on. And last one was, where did it go? So we talked about monthly cost to acquire a customer, and here it is. And then of course last one is the year to date cost to acquire a customer. And so this here is when you take into consideration your retention rate. So like retention here, we can figure out our year-to-date cost to acquire a customer. I mean, you're like, what's the difference between the monthly cost and the year-to-date cost? Well, the monthly cost is telling you, hey, you spent $1,000 on marketing this month and you got 100 students, so it costs you $10 a student. That's telling you what it costs for a month. But for this, it's telling you over the whole year you spent this much on marketing and you got this many students, but you only retained, say 82% or something like that. And so therefore, based on all those numbers, and again, this is all automatic, we just use a spreadsheet, plug it in, that will tell you what it's actually costing you to not just get a customer, but to get a customer and keep a customer. So it's the equivalent of going from, saying, having 50 students to 51 and keeping there at 51, because most people have some people coming in each month and quitting each month. And so when you're really small, the retention rate's really high. But when you get to, 500 students, 200,000 plus, your churn rate might be the same percentage, but it's actually more people because you got more students. So you can do the basic maths there. So all these here were all little things that you want to be checking every month. So hey, if you would like this spreadsheet, it will be much more nicely designed and in color. This is my tatty version I scribble all over. If you'd like access to this, I'll send it to you totally free. Just go to the Builder Music School Facebook page and just message us, just with the word monthly checklist. So just message monthly checklist, and the team will just know to send that straight to you. So you'll get that on Messenger as a PDF, and you can just download it and save it wherever you need to. If you'd like to know more about how to actually manage all your studio finances like a pro, and so all this stuff can just be done for you, like just plug in your numbers each month, takes 10-15 minutes, and everything's beautifully graphed, and you can see exactly what's happening in plain English so you actually understand it. I'll put a link to a little course, mini course that you can check out, and it'll have access to the template that I built. Loads of people are using it, and it's helping them totally untangle their finances and make sense of what's going on so they can make decisions, have a lot less stress about it, and it really does change their business and change their lives. So check out that little cash flow challenge as well. In 5 short sessions, you'll have everything under control, you understand what's going on, and you'll be measuring things that you didn't even know that you needed to measure. And so once you plug in all your numbers, you'll see the historical data. It might be the last 3 months, 6 months, whatever you want to put in, and you'll see what's been happening straight away. And you'll be pretty impressed with what you're able to now see, and it just makes your job 1,000 times easier and less stressful. So I hope you enjoyed this video. Please like, subscribe, that would be much appreciated.